right. I mean, this is, it's affecting markets now. Let's talk about oil, Greg. Oil trading slightly lower this morning following 2 days of gains. Prices up better than 8% in the last two sessions. Greg, your thoughts on the impact to oil and what is behind this move now at 67.75 a barrel?
Yeah, look, I think there's more room to the upside for oil. And I think, one of the challenges was some demand metrics coming out of China. But remember, there's some real supply glitches here. When you had the president of the United States begging OPEC to pump more oil a few weeks ago, that's a really troubling sign, although it's a very good sign if you're buying oil or if you're trading oil. So look, I think the fact that U.S. basically had energy independence before this administration and became the largest producer in the world was good if you were trying to keep prices down or at least at some respectable level. Now with cutting back on Keystone, cutting back and over-regulating the industry in the U.S., I think that's a real negative sign economically, but it's a good sign for oil prices if you're long oil.
So you're looking at the supply-demand situation. President Biden kills the XL pipeline, kills the ability to produce our own oil as we were independent before this administration, and that's impacting supply in the global market. What about the overall demand story? Do you see the demand picking up as things normalize, or is it questionable now with the questions around COVID and the Delta variant?
No, I think in 2021 and 22, I expect demand to be, hanging right in there. Look, the V-shaped recovery continues. I think the recovery story is still a good one. I'm more concerned with the long run. Inflationary pressures. Speaking of oil prices, that's really going to be, much of the movement in oil prices is because of the printing of dollars and the debasing of the currency. So, there's some issues beyond economic recovery, and I do think the economic recovery will continue to be robust in 21 and 22. But it's the long-term issues. It's overstimulating. It's keeping these emergency measures in place when the emergency is over, and yet restricting supply with the tax and regulatory burden, basically the hostility to job creators. And that's going to create some really, really worrisome long-term issues when you start looking at late 22 and 2023.
Yeah, I'm with you all on all of these issues. This is so important in terms of policy and its impact on the macro story, impact on the markets. Really important conversation this morning, gentlemen. Thank you. Peter Anderson, Greg Swenson, and Keith Fitzgerald. Gentlemen, we'll see you soon. Thank you so much.